Hello traders, this is Chris from AAAFx taking a look at the Dow Jones 30, and as a result of the action on Thursday, it looks like we're going to try to squeeze that last little bit of juice out of the market for the year. We did not get follow through from the previous session, which is interesting because I thought for sure we would, but really you're playing a game here where you expect the market to be okay sitting, well, we're now only 15.9% from the lows in 2 months. That's not normal behavior. And it'll be interesting to see how this weekly candlestick plays out, because if we get a hesitation candle like this, we could very well break down below 37,000. And if we did, a move down to the 36,000 level would be just shy of a 38.2% Fibonacci retracement. I wouldn't short the market, but I certainly won't chase it up here. Best case scenario, the absolute most bullish case scenario, is that we grind sideways between now and the jobs report coming out on the 5th. This next week will be thin. It'll be interesting to see how it plays out. For the most part, very dangerous trading. What I would love to see is some type of serious breakdown. 1,000 points, maybe 2,000 points. Then you can start to pick up value. Very difficult time of year to trade. You need to be very small with your positions. You can't take on big positions in this type of situation. An example of that was yesterday. You could have found yourself on the wrong end of a 600-point move rather quickly. Granted, that doesn't always happen, but you can see that 37,000 was respected. If it gives way, then we're going to go looking at 36,600 for your next support level, and then 36,000. This is not normal market behavior. It is a melt up, which is probably the last thing we needed. That only puts more pressure in the market. A lot of this is manipulation due to zero data expiration options. You know, they force market makers to take on the opposite position, and then it just causes an upward squeeze. These types of games are played until they stop working. Unfortunately, it's a lot like the GameStop fiasco a couple of years ago, where it ends poorly. So, you know, there's a lot of money being made in the short term, but you don't want to be the last one holding the bag. That's the catch. 36,000, I'd love to see that return to there. We'll have to wait and see. Most bullish case scenario is bouncing around between 37,000 and 37,600. If we take off again during the Friday session, that only makes it even more dangerous.